just go over some go over some basic kind of protocols, I guess, or processes. So if you have a question, we want you to put that in the Q&A. So if you would do that when you have a question. And then, of course, if there's some reason where you can't see or you can't hear, or you're just doing a general comment, then it's okay to put that in the chat. And we will try to monitor those as on a regular basis as we can. And I know some other folks are still coming in. It's so, Christopher, I guess I should have waited for you to record, but so I'll switch. So since you've already started the recording, and we'll go on and get started. So definitely welcome to each of you. This is the second part to our basic QuickBooks online seminar that we're offering, and we here at the New Mexico Small Business Development Center are really just happy to provide this information to you as you grow your business and just really just help your business succeed, be successful according to your definition of success. And so on last week, we did go over the basic ways of getting around on the QuickBooks Online software or platform, and we did expenses. We talked about that pretty much in depth, and just to kind of recap, when it comes to where you're wanting to know where your business is as it relates to who you owe, then you definitely want to use the enter bill and then pay bill, so the two-step option that we talked about. If that's not something that you're really needing for your business and you're just going to pay the expenses as they are due, then you can just simply use the write check option to actually record when you pay those expenses. And then, of course, we talked about credit cards when you purchase services or items, products using your credit card, that you would use the expense feature to record those single receipt transactions into QuickBooks. And then at the end of the month or whenever the credit card bill is due, then you would just pay the bill to the credit card company. We begin talking about the different sales transactions and want to bring that up on the screen. And I'm not sure if Chris can hear me, but I want to just make sure that I am showing you exactly what you need. Let me share my screen first. Let me get over there. Oops, let me do that again. Give me a moment. I want screen 2. Technology, you definitely have to love it. Okay, I am hoping that you all can see my screen, and it should say create sales receipt or invoice demo. And it's a white screen with the blue ribbon at the top. And if someone can put in the chat, thank you if you can see that. Thank you, Peter. I appreciate it. All right. So we began yesterday talking about, thank you, Mason, about, or not yesterday, last week, ended with the different sales transactions. So QuickBooks allows you to uh, do either a sales receipt or invoice for your sales documents. And really, just think about it this way, the only difference between the two is when you get paid for your services or products. So if you get the money at the time that you provide the product or the service, where they are giving you a credit card, a check, or cash, and that's going to be deposited into your bank, then you want to use the sales receipt option. And this is what the sales receipt looks like, and very similar to the invoice. And so, again, the sales receipt is when you're receiving the money right away. Then the other option is the invoice. And the invoice is when you give your customer the product and service, and then they pay you later. So whether that's the next day, 10 days from now, 30 days, 60, hopefully it doesn't go longer than 30 days. And then you would fill out an invoice, and you fill it out the same way that you would do a sales receipt. But when you do an invoice, there is some extra steps that you have to do when you receive that payment. And we're going to go over that. So really, when you use the invoice process, then you are basically setting up an accounts receivables. And of course, the accounts receivables is saying that your customer owes you this money, and you're going to give them a certain amount of time for them to pay that at a later date. So QuickBooks, in the background, it's going to increase your sales on your income statement. If you all remember, we talked about that last time. And then it's also going to increase your accounts receivables, because that's money that's owed to you. And then the second step is when you're going to receive in the payment, and then the third step would be to make the deposit. Okay? So I am going to stop sharing so that I can go to our website here. And again, you all remember from last week. Let's see. I want to make sure you see this. I have the QuickBooks Online sample. The first screen, that's what I'm going to, and hopefully you all can see that. And it should say Intuit QuickBooks
We
Security
don't
Ver.
we
Oh, you
don't see
don't?
that, Sandra. We
Okay.
see your beautiful face in the front.
Okay. Let's see. Do you see it now?
Yep, it's up
All
now.
right. Thank you, Chris. I appreciate it. And to go to the sample file, let's see. I'm going to again put that in the chat so that you'll have that in case that you don't. And again, the sample company file is for Craig's Design and Landscape Services. And this is where you can go in and just play. And you're not going to mess anything up. You're not messing with your own company data file, and it's really just so that you can see what happens to a particular transaction, or again, just to test different things out, or to even just get comfortable using the program, and without messing up your data files. So this is how you can use the sample company. Another thing I wanted to point out, of course, you see the logo here. So you can always click on this button, and it will take you where you can actually into the account and settings, and you can go on and upload your company logo. And and once you upload it, then just make sure you save it. Actually, let me just, since I'm there, let me see if I can play. As we just, Christopher just sent me a little virtual background. I'm going to upload that, and then I'm going to save it. And even though I saved it there, I also need to save it here. And now I can close this window. And there is my company logo. And this logo can appear on all of your invoices, or really any of your forms that you're wanting to send out to your customers. Oh, anyway, so that was a little side note. Okay, so we'll come here and we'll go on and click on, not send invoice, sorry, I didn't mean to do that. Oh, well, there we go. The terminology changes here quite often because they're always trying to improve the QuickBooks Online. So here I can go on and create an invoice, and I'm just going to use Duke's basketball camp. And again, since Duke is a customer that we've already entered all of his information for his address, the terms, which is how long we're giving him to pay, this invoice will come up. So this is the top part of our invoice, and then our bottom portion of our invoice is tied to our chart of accounts. And remember, we talked about how important the chart of accounts is to a business and the purpose of a chart of accounts. And so this bottom portion right here relates to our chart of accounts, our financial statements, ultimately. So we're going to say that we are going to sell to the Duke's basketball camp. They need some installation for their landscape, so we're going to do some landscape for them. And again, because I already have this product already set up in my books, everything that's related to that will come down. And the neat thing here under description, I can change it or I can add to it. And then the quantity, so let's say it's going to take 5 hours for this installation of landscape design, and we charge $50. So I can also change the rate. Let's say for this basketball camp, since they are we just want to give them a break, let's just say that, we can go on and change the rate and just charge them $35 instead of our regular $50. Or the other thing that we could do also is a discount percentage if we wanted to do that, but we just change the rate. And we're going to say, since they are a non-profit, they're not going to be taxed, and so we will not select the tax where the $175 would be taxed. Okay, I don't think that really happens in New Mexico, but that's a great question to talk to your SBDC advisor and your accountant about. Alrighty. So that's basically our invoice. And then what QuickBooks will do, as I said, once we hit the save and we can hit save and send or save and close, and I'll show you what happens with save and send. Um, then QuickBooks is going to increase our sales account as well as our accounts receivable account. And so Chris is answering that question. So let's go on and do save and send. And so the next screen that comes up is the template for this email and for the invoice that we are going to send to this client. So QuickBooks will automatically put in who it's from. You can also add a Gmail address here. I haven't used this function, and I probably should, just to see if you can add any other type of Gmail, or yeah, so it has to be a Gmail account. Okay, and it's going to go to the companies at their email address that you entered in their customer center. You can change the subject line for this email, and then the body of the email is standard. It can be changed globally, but you can always change it to fit the individual person that you're talking to. So, one of the things that I always like to use instead of dear, I always like to use greetings. And I just like to use their first name. I just don't want it to be so formal. And then, if you know something in particular about Peter, or, maybe they had a anniversary or had a baby, or whatever it may be, you can just personalize it a little bit. So totally up to you. Okay, so now what will happen is on the other end, when Peter sees this, of course it will be an email. It will have this in the body of the email, course, and then attach would be his invoice. So he will have the option of actually, and there also be what would you? So he has the option to click on an icon, and it will actually show the invoice, and he can also click on a button to say pay invoice. I think that's what it says. And so if he clicks on that button, then it takes him to where he can pay either with a credit card or ACH. And when Peter does this, then Intuit, after several days, you will see a deposit for that particular invoice. So it won't be exactly $175, because Intuit is going to take the fee out. So if it's whatever that fee is, and I can't remember how much they charge right now, I think it's 2.89 or something percent. So they'll take that fee out, and you'll see a deposit for the $175 minus the fee. And then you will also see where QuickBooks is charging you for that fee. And I'll show you what that looks like on the other end. Okay, so now we just want to do send and close, or we can print it so that we can see what it looks like. also. So we'll do send and close. And of course, the email wasn't sent because this is a sample file. Alrighty. So Lori asked, do we still charge a nonprofit GRT? And Christopher, I just see that you're typing the answer. Are you still answering that question?
Yes, but this is, I put so far, you don't charge a nonprofit if they provide you with their tax exempt certificate. And I'm finding the information straight from the state where it talks a little bit more about that, and I'll put it in the chat or in the Q&A.
Okay. And and if I'm not mistaken, I think for labor, I think there is a charge for GRT, but products, there's not a charge for GRT. But yeah, so Chris to take care of that. And Lauren asks, do we need to set up a merchant account with Intuit to receive payments via CCC credit card? I just gave you Clovis Community College abbreviations. I knew that was too many C's. So, credit card, so CC, or the ACH, which automatically just take it from your bank account to their bank account. So, no, it's not per se a merchant account. You do need to tell. Yes, yes, it is a merchant account. It's not like traditional merchant account. So I'm kind of going back to the old school there. Um, but yeah, it's somewhat of a merchant account. And but the only thing is, Lauren, is that uh, it's not a monthly fee that you would pay to Intuit. They do have that option for another sort of merchant account that they have, but for this one, it is just really kind of pay as you go. So the other merchant account that they have is where you could receive your money like, the same day. You want to receive it the same day. And so with that, uh, there is a monthly fee that Intuit charge for that. Yes, it works like Square. Okay. So Tracy, I'm glad I was looking because you put your question in chat instead of Q&A, but that's okay. Uh, if you print and send the invoice on our own, then we can avoid the fee. Uh, if it's just a print, yes, yes. If you just print it out and it comes out like I guess if you're saying to send it via snail mail, then definitely yes, you can avoid the fee. And that, the customer would just send you a check, or maybe the customer would call you and say, hey, I want to pay with the credit card, and then you could just take their credit card over the phone. You would avoid what the fee that Intuit would charge you, but whatever other merchant account, whether you're using Square or PayPal, however you would accept credit cards, there's still going to be a fee there. And then with ACH, again, I guess that would depend on your bank if they would actually charge you a fee for ACH. Usually, what I've seen with banks, they don't charge for ACH, but again, that's going to depend on your bank. So really, I guess the best way to avoid fees, definitely if your customers would send you a check. Okay. I think we got another question. Oh, You're welcome, Lauren. Uh, how do we apply the payment if the invoice is for 175 and QB takes a fee? What do we do with the difference on the invoice? So it will not show a difference on your invoice. QuickBooks knows that $175 that they paid is applied totally to that invoice. So that is your sales. So your sales are going to increase by $175, and you okay. So it knows that. Then the fee, and just for, let's say the fee is $2, just for easy math. So what happens with that fee is QuickBooks will charge you that fee, and in your books, and you'll see the fee that comes in through your bank, through your bank downloads. You will tell, or if you don't tell QuickBooks, QuickBooks will automatically put that into a QuickBooks fee expense account. So that $2 is an expense to you, to your business. So QuickBooks will reduce your checking account by that $2, and it will increase an expense account that's called QuickBooks Payments, I think that's what it's called, of $2. So that's the offset. So that fee doesn't have anything to do with your invoice and your accounts receivables. And hopefully that is understandable. Is it Tenora? I'm probably pronouncing that wrong, and I apologize.
It's actually Ida. I'm gonna change her name now.
Oh, okay. Okay. So Mason acts, basically you'll just be paying the $289 and no other fees to the credit card company or PayPal and the like. It just lands in your account. Is that correct? Yes, Mason, that's correct. It seems like these days, unless you take a check, one of those businesses will take their close to 3%. Yes, I agree, Mason. Alrighty, cool. Alrighty. So I am still showing that there's 7 in Q&A. Do I need to hit done? Is that why I'm still showing that, Christopher, or do you do that?
Are you still seeing the Q&A?
You know what? I
Okay.
figured it out. I guess I had to
Okay.
do it on my end. Okay. All right. Okay. There's something in chat. Is there another question? Oh, okay. Got that. Okay. You're taking care of that. Cool. Alrighty. So that's the first step. You're going to send the invoice or create the invoice. Okay. Now, the second step is when you receive in the payments. So for this one, I am going to go on the navigation bar and go to invoices. So QuickBooks shows me all of the invoices that I have created. And depending on your really all the invoices that are open, that are outstanding, they probably should appear first, but you can always sort by customer, by date, the number, the invoice number, the amount, status. So you can always sort by those. Okay. So we have here, and let's see. Okay, so here's ours that we created for Duke's basketball camp. We created it today, and we're giving them 30 days to pay it. And so that's why it was at the bottom of the received payment of all the invoices. Okay, So we're going to say that Dukes went on and sent us that payment. So we are going to come here, and they sent it to us via check. Okay. So let's go on and receive in the payment. And this screen does look a little bit different than some of the other ones that we've had, but still the information is basically the same. How you know what form that you're in is right up here at the top left. It will say receive payment, whereas when we were on the invoice, it said invoices. The customer is always going to be here. Because we clicked on this $175 invoice, we don't need to go to find by invoice number because it already came up. And then, of course, since we clicked on receive payment and today is the 10th, the payment date automatically fills in. So here, if you do not have a Square that is talking to QuickBooks where it would automatically kind of download these payments into your QuickBooks account, let's say that the customer actually called you on the phone and they just want you to take their credit card information. So when you come to payment method, you do have a choice of how you receive this payment. So if they pay with an American Express, again, where you're taking that information over the phone, then you can come here and you can do American Express. And then, of course, how that was deposited into your account is probably going to go directly into your checking account. Okay. So let's say again that they just wrote us a check or they gave us cash, but we'll do a check. So we're going to the payment method, we're going to say is a check, and the reference number is their check number. So let's say that check number was 5632. And then you need to tell QuickBooks where you want this $175 check deposited to. So if you remember from last week, I did talk about how you make deposits. So if you wait until the day ends and all the checks and the cash that you received, you collect all those together and then make one deposit to your bank. Then when you come here to receive payment, you want to tell QuickBooks that you are going to deposit this in an account that's called undeposited funds. And the undeposited funds basically represents your safe or your cash drawer, or wherever you hold again your checks and cash before you make that one deposit to the bank. Okay, so that's what we're going to do, just make one deposit to the bank. And I always really caution you to make sure that you look at the physical check or count the physical money and make sure that it does add up to the $175. Okay. QuickBooks, again, since we clicked on receive payment for that $175 invoice, it automatically here at the bottom will put a check mark here by this invoice that we created. Okay. And everything else is grayed out here except that little check box to the right, and over to the left the amount. So again, QuickBooks will fill this in based on what you have here as amount received. But you can always change it in either location and it will change. Okay? So we received a check for $175 against the invoice. That's $175. So in the memo, again, you can put whatever you would like to, but what I like to do is put paid invoice number 1038. And I don't know, I have had some clients do this where I wouldn't do it, but they did it. Actually scanned the check and then uploaded it here. I mean, you could, but I don't know if I would do that. I would definitely do the check number because you want to make sure when you are reconciling, you can be able to find that check number. And then the other reason why you want to include the check number here is in case that check bounces and you want to be able to identify it. Okay, so now we have some choices. We could do save and close. We could do save and send. And a save and send, it will just send this customer, Peter, a receipt saying that we received the payment and the check number that was applied to it. Or the check number, yes. The check payment and the check number that was applied to the invoice. Or we could do save and new, which would save this and then give us a new receive payment screen. So we're just going to do save and close. And let's give it a moment. Okay. So now in my invoices that are still have received payment, I'm not going to find that one for the Duke's camp. It is actually going to be changed to that it was paid. And so now the only thing that I can do with this invoice is I can print it, or QuickBooks does allow me to send it, do a duplicate. I can share the invoice link, and so that's an option. I would not void it or delete it because it is paid, unless that's something, later that needs to be done, for whatever reason. But I wouldn't do those now. Okay? Alrighty. Just kind of really just shows us the trail of that invoice. So it shows that we sent the invoice and the date and then when it was paid. And so the third step is now the deposit. So again, QuickBooks just has this check in, again, a safe deposit box or your safe or your cash drawer. So it hasn't been taken to the bank yet. Okay. So now the next step is, the third step in this process when you do an invoice is to make the deposit. Okay. So we'll go to our navigation bar and we'll click on New. And under the Other column, we have Bank Deposit. So we'll click on Bank Deposit. Now, Bank Deposit screen looks very similar to our Receive Payment screen. The difference is that instead of having the customer name here, we have the account. Because we're telling QuickBooks we want to make a deposit to a checking or savings account. Okay? So, one of the things that I will caution you on here is if you have more than one checking account, it is going to, sorry about that. You want to make sure that you select the correct checking account. I know some businesses have multiple checking accounts, and so again, make sure you're recording it into the correct checking account. And just another tidbit that I would recommend is when you are naming your checking account, I would put the bank name, and whether it's a checking account, maybe you have a payroll account at that same bank, and that's what I would name it. So whatever the name of the bank is, and main checking account, or something to distinguish the different checking accounts. And that way in your QuickBooks, you just really won't have an issue. The other thing that you want to make sure of is this date. So this date should correspond with the date that the bank says that they received the deposit. So if you, on a lot of your banks, if you make a deposit like after 3 p.m. on a Friday, they are going to use the next work day as when they receive that deposit. So again, if it was on a Friday and the next work day is Monday, then that's the date that is going to appear on your bank statement. So I would highly recommend that you make sure that this date corresponds with whatever the bank says. So Crystal asked, if you no longer use one of the checking accounts, is it safe to delete it? So Crystal, I am not a fan of delete at all. So I would just make it inactive. So just make it inactive. And Lori asks, what do you recommend to do if they don't pay in full? So if the $175 was not paid in full, let's say that they only paid $100 of it, and that's what the check was for, Lori, you would still go on and enter the $100 in that receive payment screen where I was at, and you would, and QuickBooks would still have an outstanding balance of $75 that Duke's basketball still owed us. And so if they don't pay it by the due date, then you can always send them a statement to remind them. You can call them. That's when you kind of go into collection mode for your business. So that's what happens if they don't pay in full. It still creates a accounts receivable saying that they owe you that difference. Okay. All right. So so that's the top part. Then the bottom part is where we need to tell QuickBooks what are we actually depositing. So we know that we are going to deposit Duke's basketball account. We have the date, the payment, and then there's my memo, and then the check number and the amount. So we're just going to put a check mark to the left of that. And so we have some other checks that are needing to be deposited. We've already received them in, we just haven't deposited them. So we can put a check mark by all three of them. And then QuickBooks will give us the amount. So it'll add up all of those checks and give us a total right here. So the other thing, so this portion, the select payments to include in this deposit are only invoices that we received a payment for. That's the only thing that will be here. Okay? If you have something in here, in this select the payments included in this deposit, and you don't have any checks, in your safe or, in your cash register drawer, then something is wrong. And that's where you probably need to investigate it the best that you can. And then when in doubt, you can always reach out to like a pro advisor, or, if you wanted to, going through your small business directors at the locations that you're at, and they'll reach out to me, and then we can see if we can figure it out. Okay? So sometimes you will also maybe receive a check from a insurance company. Maybe this was a refund that the insurance company gave you, or an overpayment for a premium that you paid, or maybe it's a check that you as the owner wrote to your business because your business needed some money. So you're wanting to make an investment in it. So let's do that one. Let's say that you are wanting to provide personal money to your business. And let's say it's $10,000. Okay? So you would actually record that check. You can record it as this deposit, but it will be down here where it says add funds to this deposit. So let's see. So we have Craig. Let's see if his name is already up here. And he is not, so I'm going to have to create him. And I don't know, Craig, the owner, I don't even know what his last name is. So let's say his last name is Williams. So we're going to do Craig Williams. And let's see. There we go. And he is not a customer. He's not an employee. Let's go on and put him down as a vendor. And let's do save. And we are going to hit. And this would be a prime example. If you're like, I'm not sure what account to put this in. You can actually create an account, but QuickBooks will automatically create this for you, though. That says ask my accountant. Because you're like, I don't know where it needs to go. And we are just going to say it's, I think it puts it in as other income. And we're just going to do save. And so that way, when your accountant or pro advisor comes into your QuickBooks Online account, then they can go into that Ask My Accountant and figure out where it actually needs to go. And then in the description, I really highly recommend that you all really use the description option and just type in monies from owner for capital injection, because that's what it is. Again, if you're not sure, just go to put as much information here as you want to, or probably some of you may put business needed cash. And then the number of the check, and then the amount. Okay. So now what QuickBooks does is add that $10,000 to the check total from your customers and make that deposit $12,237.52. And there's the total again here. Then in the memo line, you could put customers' deposits, and let's see, do customers and owner deposits. Okay. Alrighty, so looks like we have a Q&A. Great question, Lauren. You could set it up as a loan. So instead of putting it in as Ask My Accountant, you could go on and create a loan account. So yes, it's whatever you want to do for your business, but yeah, you can do it as a loan to your business. Great question. Now here, sometimes when you deposit funds in your checking account, you want to get cash back from it because you need some cash, say you just needed $100 or what have you. The banks will allow you to do that. Actually, I take that back. Not all banks will allow you to do that. And I'm like some of those other banks. When you make a deposit, it just needs to be a deposit. You should never get cash back. I would highly recommend that you do not do that. It could just be confusing. So I'm not even going to show you how to do it. No. If you want to know, I'll show you. But so I'm thinking about my business checking account, and my bank will not allow me to get cash back on deposits. So that's their requirement, which I think that's pretty good. So anyway, you can save and close or do save and new, and you can also print this too. So let me show you what it looks like to print, because this is what I like to do. So you have different options. You can actually print the deposit slip and summary. Now you'll have to pre-set up a deposit slip so that you can enter it into your printer, and QuickBooks will actually fill in that deposit slip for you. Or you can just do a print deposit summary only, and that's what I normally do. I'll show you what that looks like. So it has the deposit summary, and it lists basically all the checks and the amounts and even the memos and the total deposit. Now, what for one of the organizations that I keep the books for, I'll take this deposit summary, and the bank is really neat about it. So instead of them printing out that deposit slip, they'll just take my deposit summary sheet here, put it in their machine, and it will print them receiving the deposit and the amount and the date, whatever they would put on a normal deposit slip. My bank does that. Some of the tellers kind of look at me strange, but they'll do it. So or you could just print it out for your record. So it's just really whatever you want to do with it, but that's just an option there. Okay, so we'll do close, and let's see. Oh wow, Joshua, we'll need to check on that. Thank you. Alrighty, so we'll do save and close. And it is 9:26. So we finished the sales portion. So let's go on and take about a 5-minute break. So we'll start back at 9:31. Do you want to stop the recording, Chris? So the question is, a dog was separated from his master by a river. When he heard his master's call, he immediately went to him without getting wet, using a bridge or a boat to cross. How did the dog reach his master dry? And so put your answer in the chat. So I give you all a moment. So a dog was separated from his master by a river. When he heard his master's call, he immediately went to him without getting wet, using a bridge or a boat to cross. So, meaning he did not use a bridge or a boat to cross. How did the dog reach his master dry? Tiffany wrote a turtle. I like that answer. So he did not use a bridge or boat to cross, but he got to him dry. That's cool, Ida. He was on the same side. Javier said he jumped over the river. Alrighty, I'll give it a couple. Oh, he had wings. He's a cape, so he's a Superman dog. Okay. Alrighty. We're still answering the question. Okay. Alrighty. I'm going to take another sip of my smoothie, which probably will not be good in another 30 minutes. Alrighty, we're going to end the poll. And let's see if anyone answered the question correctly. Joshua said he had an Uber boat. Love it. I like the road turtle. He jumped. Doggy paddle, Michael said. Ida said he was on the same side of the river. Javier jumped over river. Ruby said wings. Peter said, as a tour guide, I can make up a very lengthy story. I bet you can, Peter. Joshua, a drone. That's good. I haven't had that one. The cape. The master crossed the river instead of the dog. Vaughn said. Louisa, his master went to him. The riverbed was dry. Mason said dug a tunnel. So the answer is pretty close to what Jonathan said. The river was iced. I thought that was a cute little joke. Alrighty. You guys ready to get back into some fun QuickBooks Online, right? Alrighty. So let me see where I am. So we did that. Make deposit, statements. Alrighty. So we will go now And our, let's go on and do payroll. Of course, I didn't ask that question. I usually ask that question the first time we're together. How many of you, and you could just put this in the chat, you don't have to do it in Q&A, will actually be using the payroll program? Or have employees, I should say. That's probably a better question. So, no. So, how many of you will you have employees? I guess is a better question. Have one. Okay. So, we still have, even just one. We'll still go on and go over uh, um, payroll. And realize that some of you, yes, won't have any. It's going to be a while, or you're never going to have any. Cool too. I would say about payroll. Uh, let me step back. About employees versus contractors. That's really a great conversation, that you could definitely have with my colleagues that are in your particular areas. Really, what's the difference between employees and contractors? And then to then have that final discussion with your accountant. I would highly recommend that you do that. And just on a quick note, there is a distinction between employees and contractors. And what happened, during the pandemic, and hopefully we'll never have that again, but, we don't know, or maybe there'll be another issue or another type program, government program that may come about. So, a lot of businesses who labeled their employees as contractors, as 1099, because it's not the same. When the government provided a lot of these COVID-19 funding, like the payroll protection program, the EIDL, the restaurant revitalization. So any of those grant programs that they came out with, it was tied to employees. And employees is anyone who you're given a W-2 to at the end of the year. And so in order to count those as employees, your level of funding or your qualifications to apply for a grant was tied to your number of employees. So another great example of this is the state of New Mexico had a loan program that was administered through the New Mexico Finance Authority, and I think it was the Business Recovery Grant, and that was particularly tied to helping businesses get their employees back to work. And if you had W-2 employees, because the definition of an employee is that they have a W-2, then you could apply for this program. For those individuals who had 1099 contractors, whether you're calling them contract laborers or whatever, if you gave them a 1099, that is not your employee. And you can't claim them as an employee. Now, yes, it reduces your cost as a business because you aren't paying for their Social Security or their Medicare tax or unemployment tax. However, again, uh, it can cause other issues too if your contractors are really, you're really treating them as employees. That can come back to bite you. So again, have that conversation with one of my colleagues in your area with the SBDCs, and then definitely have it with your accountant and or CPA too. Okay, I will get off that bandwagon. You can see how I'm kind of passionate about that. So, well, let's talk about payroll. And again, let me make sure I go to the right screen here. Oh, golly. Okay. I have about 3 screens here, and I got to make sure that I'm on the right one. There we go. Alrighty. So hopefully you do see let me quickly go through here. All right, so we're going to discuss payroll. We'll do some bank feeds and sales tax, and a little bit of reporting, and that's might be where we will actually finish for the day. So payroll. We're going to look at the different payroll programs that are available to you, and then just the common payroll reports that QuickBooks Online has. So actually, let me stop this because there is a new payroll. Let me get to it here. Service that's available. They no longer have the 4 that are listed. Alrighty, here we go. So if you decide to do payroll using your QuickBooks program, it is a standalone subscription. So you will need to have the QuickBooks Online or desktop. You can also use it with desktop. So you have to have those in order to use the payroll. And then here are the 3 options. You have Core, Premium, and then Elite. So the Core is $22.50 a month, and then for each employee, you will be charged $4 per month for those employees. So some of the features that it has is a full service payroll, and this is neat that it will include the taxes and the forms that's needed. It will also help you fill out for contractors those 1099 e-files, and you have expert product support, and it's also included next day direct deposit. Then the premium, this takes everything that Core does, but it adds HR support and employee services. That's at $37.50 a month, and that's at in addition $8 per employee per month. So it provides same day direct deposit. You can have an expert that will actually review your information for you. and it can track time on the go, meaning that your employees can actually use this service where they can log in, and it will basically track them, you know, wherever they may be if they're off site or something. The additional services that it offers is, as I said, HR support center, workers comp, uh, for those of you who have to have workers comp insurance. So, and that's why this one is the most popular, because it will provide all those. Sorry about that. Then the Elite, the big difference here is where you can access on demand experts to simplify your payroll for you. It's at $62.50 a month, and you pay an additional $10 per employee per month. So it does, you know, everything that the other ones will provide for you, except that you'll have an expert that will actually set up your payroll for you. It will not only track time, but also projects that you have. You have 24/7 expert product support. It has a tax penalty protection. So if you're ever audited, there are some um, features that it provides for you. And then you have your personal HR advisor. And then, of course, everything else that the premium offers. Okay? So those are your options. And let's see. Stop sharing here. Okay. I think I have too many things open here. And so let me get back to my PowerPoint. And actually, sorry about that. Just a quick pause here. Alrighty. Okay, so this screen is going to look a little bit different when I actually go to the live sample file. In that the navigation bar, I think it actually says payroll instead of workers. Um, but still, still it's the same. It's just a different wording that they're using. If you don't have payroll activated, then the next screen that you will see is to get started. A little button to say get started. So what do you need before you get started with payroll? You need to make sure that you have all of your either you have registered, or even, you know, your accountant can do this for you, but you know, you will need your federal EIN number, employer identification number. You'll also need your state business number. It was formerly called the CRS number. Now it's just called the state business identification number. You will also need your workforce solutions number. And all these steps are steps that the Small Business Development Center, we have a little sheet and we can definitely kind of walk you through the process as well. But you'll need that Workforce Solutions number. And you will also, for those of you who have 3 or more employees, you are required to have workers' comp. So you'll need to also register with the New Mexico Workers' Comp Administration for that number as well too. So you'll need to make sure you have all those numbers. I know that's a lot of numbers to have. You can, as it says, work with Intuit to set up. And this form 8655, I believe this is where you're giving Intuit permission. I need to really check on that. To provide, to actually access your different accounts. And if you are already using another payroll provider system, then you can use the information from that system and convert it into the QuickBooks payroll. The other thing that I can't believe I forgot this as far as numbers you need is your bank routing and account numbers. So again, some of you may have a separate checking account for payroll. If you do, that's the bank routing and account numbers that you're going to use, or if it's just your main account. You need to have already established if you're paying your employees by a salary and hourly, if you're offering any type of retirement or other deductions that you want to offer. And depending on when you actually start your payroll initially for the first time. So, you know, if you've been paying payroll starting January 1 of this year, and then you're wanting to use QuickBooks, you know, starting in March, what have you, all the information, the payroll information that you've paid your employees up until March, you would need that information. And let's see what else. Of course, you know, you should have all your employees do a W-4. That's important. Okay. Alrighty. So you'll need all of that information. So this is, did you do something, Chris, or was that me? It says the sharing screen has stopped. I didn't do anything. Or maybe I did. Maybe that was on my end. Sorry.
And then we do have a attendee with their.
I can barely hear you too.
Can you hear me better now?
Yes.
We have an attendee with their hand up. Do you want me to allow that attendee to speak?
Oh, yes, please. Sorry.
Hattie or Haiti?
I'm sorry, it was an accident. Sorry.
Okay, no, that's fine. It was a false hand.
Okay. So let me go here. Okay. So I'm just going to the live sample company, and hopefully you all can see that.
We
Okay,
can.
I'm going
We
to.
can.
Alrighty, cool. Okay. Okay. So, as I said, in the sample company file on the navigation bar, it's payroll instead of workers. And so we want it. Now I will be somewhat limited on what I can do on this one, but I will try to walk you through it the best using this sample company file that we have. So we already have 2 employees set up, and I can always make my employees inactive, which again, instead of, when an employee leaves you, you never want to delete it. Actually, I don't think QuickBooks even allows you to delete that employee. You just make them inactive. And then I did have one business who did not pay some of their employees on a regular basis. It was, just, sometimes they didn't pay them for months. More seasonal. There we go. And so what they would need to do is come in and make that employee inactive. And when you make the employees inactive, QuickBooks is not going to charge you that extra fee for them for the month. So you want to definitely don't want to pay them the $4, $8, or $10 for employees that you're not paying for a month or 2 months or what have you. So to make them inactive. Okay. So we can go on and let me just show you how you can. Okay, it's not gonna let me do that. Okay. Oh, okay, it did. I misread it. Okay. So here's the employee center information. Anywhere that you see a red asterisk, then you need to enter it before moving on. But of course here, we're going to say Tom Green. And you want to make sure that you do use the name that your employee used on their W-4 form. And that W-4 form should reflect what is on their Social Security card, because you'll definitely need to tie it back to them that way. Their address, again, I would go on and have that W-4 form in front of you where you're entering all this information into their account. I'll just use Clovis since that's where I am. And then, of course, any notes that you want to enter for that employee, their email address, if they have it, phone number, billing rate that you are going to charge, let's say $25, your customers for. And I would highly recommend you do this, establish a employee ID number instead of always using their Social Security number as it applies to maybe just in-house reports that you're using, or to be printed on their check stub. And actually, I don't think QuickBooks will allow you to print their Social Security number on their check stub anymore. But anyway, you can use an employee ID. Their gender, right now, it's, the only 2 options. Their hire date, say they were hired today, and then their release date. So in the release date, this would be the last day of their employment with your organization, and then their date of birth. Okay, and then all of this information, as long as it's not these 3 blocks, you can always come back and enter it at another time. So there's my Tom Green here. And I am really not going to be able to show you how to create a payroll using the sample company file. And just for, confidentiality, I can't even go into one of my clients' accounts. Um, so I apologize for that. QuickBooks does have another tab as it deals with contractors, which, you know, this is also tied to your vendors. Um, you can have vendors there that you are providing a 1099 to. So that's what this screen kind of looks like. Here's your workers' comp. Now, of course, because this sample company is based on a California company, that's why it's California. But if you did have to have workers' comp, then all the detailed information would be here. Okay. So I will pause just a moment just to see if there are any specific questions on payroll that I may not be able to show you, but I can probably answer for you.
Sandra, there was one in the chat that says asking, can you use payroll for one person in an LLC?
Yeah, you can. You so it's kind of a loaded question, Joshua. So if you are a LLC and your tax structure is a S corporation or corporation, then the owner is an employee. And so you can use payroll for that one person. If you are a LLC that's taxed like a sole proprietor, meaning it's a one person run business, but you're still a LLC, the owner is not a employee. So you will not have them as payroll. You won't pay payroll for them. I think that's kind of what your question was, because really you can be an LLC and it's just as long as you have employees, then you use payroll. Hopefully that helps. Or that's clear as mud, right? All right. So let me see if there are any reports in here for payroll. And okay, so there's not, because we really don't have payroll set up. Okay, so no other questions. But definitely before you begin payroll, before you decide, then I would again highly recommend that you get with one of my colleagues, and we can go over the basics of payroll, what you'll need, what you need to watch out for, questions that you need to address to your accountant, and then go on and visit with your accountant about doing payroll. Okay. Alrighty. So let's look at bank feeds and try to do some reconciliation. Let me stop sharing that. And I'm just on a slight pause. It's hit Christopher. Just want to make sure I get everything together.
Sounds good. Do you want me to pause recording?
No, I think we're okay.
Very good.
Alrighty. So, do you see the QuickBooks Online topic 10?
We
Bank
do.
feeds and reconciling? Okay.
We sure do.
So, next we'll go over setup and utilizing bank feeds, and then talk about some of the common issues that you may have. And I will tell you that this is definitely a way to make your life easier if you do these bank feeds. Um, and doing them right is also important. Okay. So this is an example of a banking center. And we'll go live and see how much we can actually see in the sample company here shortly. But we have our checking account, our savings account, and then we have a credit card account that we also have bank feeds from. So it will, and I'm not sure how many of you actually have bank feeds, or you go daily into your online checking or credit card accounts and just really kind of look at what the transactions have come in. So the bank feed in QuickBooks works very similar, where it will actually go out and connect to your checking or your credit card account. And when it brings in those transactions that have that the bank has accepted, it puts it in a holding place, and where QuickBooks describes it as a non-posting area, and that's where the review tab is here. And it just basically means, again, that here's a list of the transactions that the bank or the credit card says that you have. And they're not going to be recorded until you actually match them and tell QuickBooks, yes, here's the amount of the deposit I made. This is what you said. Download it. I want to match those together. Okay. Or if a transaction that downloaded from the bank or credit card account is not in your register, so it's not in your QuickBooks data file, then you can always add it at that point. So again, it does make life simple. It even provides a where you can just reconcile on a daily basis instead of waiting until at the end of the month. So I remember when my husband and I got married, and he would go log into his checking account every day and reconcile his account. And I'm like, I'm not doing that. That's a lot of time. I'm from the old school. I'm like, no, we're going to wait till the end of the month until I get that entire 30-day list of transactions from the bank, and then I'm going to reconcile. Well, now with this bank feed, you can have the best of both worlds. You can reconcile daily, or you can wait until at the end of the month, or both, actually. So anyway, it's really pretty neat, and so we'll go over it. So the other thing that I want to show you here, let's see. Okay, so right now we're on the review tab, and again, these are where the transactions have come in, and now we need to tell QuickBooks, do we want it to match, add, or if we want QuickBooks to forget about it. Don't even add it to our register. So here for the first transaction, we have on May 25th, 2020, a description, and it looks like it might be a vendor, someone that we actually paid money to, and that's just in the description. Notice that in the payee column, there's nothing here. And then QuickBooks doesn't know what this money, this expense was used for. So it is just going to put it into an account that's called uncategorized expense because it doesn't know what this $150 was spent on. So this is how we know it was money going out, because it's in the spent column. And then the action column, we have a choice to add it if we wanted to. Now, I would say before you click the add button, even if you do click the add button, you can always go back and change it. But if I just click the add button here, then QuickBooks is going to enter in everything as we see it here. And again, you're going to have an account at the end of the year or end of the month. That's called uncategorized expenses, and it's going to have all these transactions in there, and it's not tied to a specific expense. So either you or your accountant would have to go through it, and probably both of you, because even your accountant, unless this Laura's lamination is a regular occurrence, your accountant's probably not going to know what it is. But hopefully you do. So what you would do is just click anywhere else except on the add button. And then actually tell QuickBooks what type of expense it actually is. And it's lamination, so it could be supplies or printing. So that type of expense. Then we have this one for the nursery, where QuickBooks has identified the payee, which is pretty cool. And they're saying that, hey, there is a record on this particular day for this same amount. Is it a match? And of course, you would still need to have the assurance that it is the match. The problem here is you may have two transactions that you paid the nursery for, but it's the same amount. And so one could be a credit card payment, and one could be a check. So you'll need to determine, is this the same? And again, instead of just clicking the match, you would click anywhere else in here. Oops, didn't mean to do that. And get a little bit more information on this particular transaction. And then the other thing that we can do is we could tell QuickBooks that I don't want any of these transactions loaded into my check register or my credit card register. And if we don't, we can just click over here in the left column in the blocks here, and then we would click this excluded button, and then QuickBooks will just move those transactions out of the review and into the exclude. And then after 30 days, then it would just delete those transactions. I think it's 30 days. Okay. So how do we even set up the bank feeds? Well, you will need to know what your bank number, your bank's URL is. Sometimes you can just enter the name of the bank. Definitely your more popular ones, which are listed here, will appear. Some of your regional or local banks, you may have to just enter their web address, uh, and that's the web address wherever you will that you go to actually log into your account. Uh, I have in the past, especially when it came to PayPal, I could not, for whatever reason, could not connect to that account. And so PayPal has where they can export those transactions, or usually all of your banks have this, where you can export all of those bank transactions into either a SCV file or one of the QuickBooks format files. And instead of, again, entering each of those transactions separately, you could just export them in. And I would just really really be careful with that as well too. I would definitely lean upon your a pro advisor or an accountant who's knowledgeable in QuickBooks to help you with that. Sometimes it's easier just to enter manually instead of exporting. Okay, so once you identify what bank it is, then you would need to enter your username or your online ID and then your password that you use to actually get into that account. Then the next step is for you to tell Intuit how should it receive this information. So you can download your bank again by the new tab and sign into your bank, or you can download the transactions, and those are the different QuickBooks formats. So a .qfx, a .qbo, or a .ofx. And again, however you're wanting to download those. Okay. Let's see. So let's actually look at. Let me stop this. I think I have something in chat, unless you already answered that question, Chris.
No, it just says old-fashioned way for me, Lauren.
Oh, I agree. I like to reconcile the old-fashioned way. A lot of people don't, but okay. So now we're back at that sample file, Craig's Design and Landscaping Services. And on the navigation bar, we are going to select banking. And we're just going to click on it. And of course you can, QuickBooks does try to provide as much education resources to you. So we could watch a video where it will give us a quick overview, or we can take a guided tour, step-by-step guidance. So I'm not sure how long this video is. So it is on YouTube. Can you guys see my YouTube screen?
We can, but if you want us to hear sound, Sandra, you have to go to more, and there should be a setting to share sound.
Okay. It should automatically just pick up.
This is Jason from the QuickBooks team.
I could hear it.
Connected your bank account.
It's a little low.
QuickBooks.
Oh,
QuickBooks
that's because I'm
downloads
low.
your recent transactions every day. Let's go over how to review the transactions downloaded from your bank and how to categorize and confirm them so your books are accurate. Go to Transactions to get started. Note that we'll go over how to do this in Business View. If you're in Accountant View, the experience is different, and you should watch this other video instead. You'll see a box for each bank and credit card you've connected. Select any of the boxes to see the downloaded transactions for that account. Here's where you'll see all the transactions that QuickBooks has downloaded from your bank. The next step is to either confirm or review each of these transactions. When you see confirm, it means that QuickBooks is suggesting a category for you. When you see review, you'll need to tell QuickBooks what category the transaction should be in. Select the transaction to see more info. Make any changes or add any missing details. You can change the category that QuickBooks suggests, or if there isn't a category selected, choose one that best describes why you spent or received the money. If the transaction is a sale, categorize it as income. Select the income account that you use to track these kinds of transactions. If you're recording a purchase you made, you usually categorize it as an expense. But if the purchase is something that you'll use over and over again for many years, like a vehicle or a computer, you should categorize it as a fixed asset. You won't see these often. If you don't see a category that works, you can add one here. QuickBooks will learn your categories over time, making this process easier. You can also split a transaction into multiple categories. Select the categories and add the amount for each. Just make sure it adds up to the total amount of the transaction. The vendor customer is optional, but it helps you run reports later to see who you paid or who paid you. You could also assign an expense or income to a particular project or customer so you can track the profitability of your work. Check this box to make an expense billable if you want to include the expense on a future invoice to the customer. These are both important topics, and we've included videos at the end that explain in detail how to use each. If you don't know who the transaction was with, look at the bank detail. This is information sent from your bank that usually contains the name of who you spent money with. You can see more or less of this information by selecting the gear icon and then toggling on or off any of the fields you see. Once everything looks good, select Confirm. You might see some transactions that you've already recorded in QuickBooks, or payments that you need to apply to open invoices and bills. If QuickBooks detects that a transaction relates to something you've already entered, you'll see Record Found. This prevents duplicates. If the transaction you have in QuickBooks matches what the bank sent, select Confirm. However, if QuickBooks is wrong and the match is not correct, don't worry. You can select Categorize to add it to QuickBooks as a brand new transaction. Or, if you know you definitely entered the transaction into QuickBooks and the match is wrong, select Find Other Matches to match it to the correct transaction. Now you're ready to categorize transactions for your connected bank and credit cards.
Alrighty. So that's just one video out of many that you can access. And I really do like, again, if you're not sure, about, this particular transaction, this Books by Bessie, or if it's already in your books, then again, you can click on it and exclude it. And it gets it out of this review category or section. I know with quite a few of the clients that I've dealt with, when they see this review and they're like, oh my God, it's 100 of them. Then they kind of get nervous because they feel that, they're missing something or they're doing something wrong, and it just gives them kind of anxiety. But I just really want to put you all at ease and just realize that these transactions, it's just a holding spot. And it's not anything. 9 times out of 10, you probably have already entered the transaction into your QuickBooks and in your QuickBooks register, and it's okay. It's just really just tying it with the bank fee. That's really all it's doing. Sometimes, and what I've seen a lot too, is where QuickBooks has an ad here for a particular transaction, and it has already been in your books and it's already been reconciled. You definitely don't want to add that transaction to your QuickBooks register. So again, you would just exclude it. Just mark it and say exclude it. So let's go to the excluded. So let's say that you did exclude something. You figure out, the next day or next week, whatever, that, oh yeah, I did write a check to Books by Bessie for $55 and it's not in my register. So you can go and tell it to undo. Of course, the other thing that you can do is, let's say, yes, these are definitely transactions. We do not want these. We're going to click on, in the heading, this square. So I just click that, and I'm going to delete all of them because I don't want to see them. Okay. So this can be your friend. Make it your friend, not your nightmare. Okay. Alrighty, so I'll pause and make sure there's not any Q&A. Okay, so you're off, Ida, by 1 cent every month. So one of the things that you can do is let QuickBooks automatically adjust that for you, and I don't know if that's what you're doing. It kind of sounds like that you're maybe creating another transaction, an entry for that 1 cent. So you can allow QuickBooks to just do the adjustment itself, and then the next month you won't have to do the adjustment. You won't have to manually do it. So I'll kind of show you that when we do the reconciliation. Okay, so if there's no questions on just the non-posting transactions that we get from the bank feed, now we're going to go to the bank register. So over here to the right, there's a link that says go to bank register, and I am right here in the checking. Here's my savings. See how when I clicked over it turns blue, and then I have one transaction there, and then my MasterCard, again it goes to blue, and I have 7 transactions to review. Okay, so we'll go back to checking and we'll click on go to bank register. And again, QuickBooks gives you different little notes, hints, recommendations, but I'm just going to close this. We're not going to look at it. Okay. So here's our bank register for our checking account. And again, it looks like any other bank register, and it has the ending balance. One of the things that people get nervous about, and I would probably say in this case I would get nervous about it too. My bank balance is my book balance for my checking account is $13,438.52, which looks pretty good, right? Now over here, where not quite midway through to the screen, it has bank balance, and it has a negative $361.93. So what this is saying is that your bank is saying as of today you have a negative amount. So that should be cause of concern, because that means if any other checks come into your account, or that's shown at the bank, then they're going to bounce. And of course, when you don't have funds in your account, hopefully you all have not experienced this, right? You get charged fees, and those fees can add up. So definitely this needs to be looked at a little bit more in depth to really see what's going on. Maybe a quick moving of monies from one checking or savings account or deposit, you as the owner really needs to get into your bank account quickly. Okay. Thank you, Tracy. Sorry you have to leave us. Okay. So let's do a reconcile, and I think I may have to kind of make this up because I want to do it live. Okay. So we have our bank statement in front of us, right? And since we're in February, so it'd be our January bank statement, right? So let's go to the reconcile button that's at the top right, and we'll click reconcile. And this is just one way of getting to the reconcile. There's several different ways of getting there. Again, QuickBooks has another video that tells you how to reconcile. So we'll do get started. And it's really trying again to really make this really streamlined and really easy for you. And we're going to let's do it. Let's reconcile. So again, you have your bank statement in front of you, or if you have it online, but you can see your bank statement. There's some things that you want to make sure that you check before proceeding, hitting the Start Reconcile button. The first thing is you want to make sure that you're in the right checking account in your QuickBooks. So again, we have our, any of our asset accounts we can reconcile. I'm sorry, any of our balance sheet accounts we can reconcile. So we are in the checking account. The beginning balance, we want to make sure that we look on our bank statement and make sure that the beginning balance is $5,000. The ending balance, we want to put, I don't even know, like I said, I'm making something up. So I may have to come back and adjust this number. So let's say that it's 9,000. I'm probably not going to be correct on that, but we'll see what we can do. And then the ending date, whatever the ending date is on that bank statement. And again, I would say probably most banks, all the banks that I'm dealing with right now, they start with the first of the month and then they go to the end of the month. And that's the monthly bank statement. Your credit cards, they will have a different beginning date and a different ending date as compared to the actual end and beginning date of the month. So I think one of my checking accounts, the beginning date is like the 6th of the month, and then the ending date is the following months by the 5th or the 4th of the month. And it seems like it always changes. So anyway, just again, go by what's on your bank statement. And then click Start Reconciling. So now, if I had, just get rid of this. If I had matched up a lot of my transactions with the bank feed matches, then QuickBooks will automatically kind of do like a pre-reconciliation of those transactions. So we would already see over here, and we don't see any, where there would be either, I think it will say C, the letter C, which would stand for cleared. Okay? And that way we know that yes, it's been recorded in my register, and yes, it cleared the bank. And so I don't have to tell QuickBooks, I don't have to go through manually and actually reconcile it. I don't have to do it the old school way. Okay. So up at the top here, QuickBooks gives us a little bit more detailed information to help us reconcile. It gives us the statement ending balance, which the 9,000 is what, I had entered. And it tells us that the cleared balance, which is really my beginning balance, is the 5,000. Okay. And so I need to come up with transactions that total $4,000. And this could be a combination of payments and deposits, but the difference should be 4,000. The other thing that QuickBooks does for us is tell us, once when we click off the deposits that have cleared the bank, it will give us the number of payments, checks that was withdrawn from our account, and the total amount, as well as the deposits. And those do need to equal the 4,000. Okay. The other thing that we have here is like a 3-button option. It's payments, deposits, and all. And right now we're on all because it's kind of there's a grayish tone to it, whereas the payments and deposits are kind of like white out, sort of, the background. So the all shows us all of our payments and deposits. If we just want to click on the payments, then QuickBooks will just show us our payments. So sometimes on your bank or your credit card statements, it will list all of your payments. And then in another area, it'll list all your deposits. And then it will list all of your transactions by date, right? Some of them. So again, this just really kind of helps you kind of declutter and really be able to concentrate on, let's just look at all the monies that came out of my checking account. And then deposits, all of my monies that came into the checking account. Okay? So let's start with payments, and we're just going to keep it on payments. And so again, we are looking at our bank statement, and we're going through, and we see that there's a payment that we made. It was our check number 10, and we made it to, actually let me whiten this, we made it to Robertson's Associates, and it's for $300. So over here to the far right column where you see this circle, this is our reconciling, telling QuickBooks that yes, this did clear our account. So we want to put a check mark there. We have another one. There's 54.55. So again, you're just going through your statement and comparing it with your check register and seeing what checks actually cleared the bank. Okay. And again, because I just need to come up with some numbers, I'm just doing this for payments. Okay. Now I come to deposits. And let's say that we look through this and it's like, you know what? all of our deposits, or we just want to say, hey, all of our deposits really did clear. So instead of checking each one of these, QuickBooks will allow us this a circle that's at the top. It's in the header. We can just click this, and QuickBooks says, hey, so do you want to select all 11 transactions? And we'll say yes. And so instead of us going individually and putting a check mark by all those transactions, QuickBooks will do it for us automatically. Okay. So I am going to pause, and actually I don't think there's any questions or anything in chat. So I'll hold off a moment, take a drink of water. Alrighty, I don't see anything in chat. Alrighty, so after we've gone through all the transactions and matched them up with what's in the check register, and we do not have this difference here is not at zero, because that's our ultimate goal. We want to say that all the transactions that have cleared the bank, we're matching them with what's in our register. And so this difference should be zero. Well, it's not. So there's something that's wrong. And QuickBooks will not allow you to go on. Let me step back. You should not go on until it's at zero. Or, like in your case, it was at 0.1 or point, like 1 cent. And I'll show you here what you can do with that. Okay, so tell you, there's several ways to kind of figure out what the difference may be here. And I tell you, I don't know the math behind it, but if you take this difference and divide it by 2, well, if it divides evenly by 2, and it does because it's a even number, then you may have had a duplicate somewhere, where instead of it being 4,616, it probably should have really been 2,308.10. So maybe there's a transaction somewhere in here that shows what that probably should not have been checked off as clearing the bank, or it should have been. So it just really kind of helps you identify what that amount might be. If this difference is easily divided by 9, if I have that correctly, then there's probably transposing that may have taken place. So again, instead of maybe this transaction right here, instead of it being $694, maybe you put in $964. So the 6 and the 9 were flipped. Okay. I used to, my first professional job, I worked for an organization, and I won't name names, and they really had not had an in-house accountant in several years. And so myself and the head accountant, we both started about the same time. And they had, I think, like 4 different checking accounts. It was, 4 different checking accounts. And those accounts had, from what we could tell, had not been reconciled in a long time, if ever. And these had been years. And to really get to really their true balance, even though their bank said they had this amount of money in there, you know, that just shows what has been presented to the bank. But to really know exactly what they had and where those different transactions, the different accounts that they needed to go to, they didn't have that knowledge. So I can't tell you how long it really took us to reconcile, but I know that there's some times where I would get down to that penny and I could not figure out, you know, where, you know, how, where's this penny? So I'll tell you, my intermediate accounting course. So it was the first day of class, and went into the class, and the teacher, his name was Dr. Young, and he was an older gentleman, really old, way a lot older than what I am right now. And you know, myself and the classmates, you know, it's like, okay, this guy's really old. You know, what can he teach us? This is an old guy. And anyway, so the first day of class, you know, they go through the syllabi, the professors, and, you know, go over what you expect, should expect in the class, what they expect for you, you know, all that kind of detail. And so he came to the point where he was talking about the different homework assignments and the work problems that we would have. And he said, you know, sometimes when you're working on a problem, sometimes you just need to go outside and talk to a tree. We're like, oh my gosh, this guy he's really old. And now he's telling us to go talk to a tree? I mean, literally, that was a discussion that was going on in class. And it seemed like, you know, he just could not hear the conversations. So I cannot tell you, that intermediate accounting class, that was the best instructor and the best class that I have ever had in my educational endeavors. And I'm not sure where that came from. And so Dr. Young was a really great teacher. But what he was saying was, sometimes that you need to get away. You need to stop doing what you're doing, close up your QuickBooks online account, and go sleep on it, or just take a break. And I cannot tell you the number of times when I was reconciling those months and years of bank statements for this organization, that we could come back the next day, couldn't find that 1 cent or that 10 cents or even that $100,000. I could not find it, but come back the next day and could find it just like that. So especially, you know, when you're dealing with numbers, you just need to take a break, and sometimes that will definitely have a show you what your problems are. Okay, so the other thing that we used to do too is, you've heard the saying that 2 minds are better than 1, right? So my colleague and myself, we would then get together if we couldn't find something, and we would go through where, you know, I would have the register and she would have the bank statement, and she's just reading off the amounts and the dates to me. And sometimes even doing that, we couldn't find it. But anyway, hopefully those are some tips that can help you all. Okay, so let's say that we've done this and we have determined that one of the things that we messed up on was the ending balance. And let me see if I can get this ending balance correct. I'm gonna have to do some quick math. So let's see, 6.2. So we could go back this little button that says edit info, and instead of our balance being 9,000, maybe we entered it wrong, or maybe instead of it, of course, in let's see, I can't remember who asked me that question. I apologize about the 1 cent. Maybe instead of it being $9,000 even, maybe it should have been $9,000.99, and that's where my 1 cent, where I'm off 1 cent. So I think that was Ida that asked that question. But we're going to say we have our total ending balance different, and I am going to see if this is going to work. We're going to say that that's our true ending balance. And then we just go back in and say, oh, I'm off to $232. Let's see. So let's say that I really didn't have a deposit of $218. Now let me go the other way. So payments. So let's say that there was a payment. Let me see how close I can get to that amount without going over. Going the other way. Let's see. Let's take that one off. T50. Let's see here. Let me do that. Not another one. Okay. So let's say that I couldn't get to the zero. I tried everything that I could, and I just can't find that $4.34 difference. It's not a check. It's not a deposit that I made. I just can't find it. So you, as the business owner, you have to decide really how much time that you want to spend trying to find this $4.34, or whatever magical number it is for you, and kind of look at it. What is your time worth? Are you worth minimum wage? And if you are, then it's really not worth spending an hour trying to find $4.34. Do you guys kind of get what I'm getting? Understand what I'm getting at? And that's really what we had to decide, when we were reconciling for this organization. We're not going to spend 5 hours trying to find 10 cents, even though I can be a perfectionist and I probably would. But that is not realistic because there's so many other things that I can do in that 5 hours, right? Can I get a thumbs up or something? Everybody's quiet. It's like, no, we're going to find that $4.34, huh? Alrighty. So let's say we can't. So what we can do in QuickBooks, instead of doing save for later or close without saving, we can tell QuickBooks that we're going to finish now. We just cannot find it. So we would click on the finish now, and it says, hey, your difference isn't zero. So it's going to warn you. And so it says, hey, even though they don't match to that zero, what we are going to do is make an adjustment and allow you to finish it. And so the adjustment date will be the ending date of the bank statement. And it will do a journal entry where it will, let's see, I think it's going to reduce. That would be the difference. It's going to reduce your checking account, the register, and then the offset will hit an equity account. Now, I will tell you, this is where kind of accountants really don't like when it comes to QuickBooks, because QuickBooks will allow you as a user to make this adjustment, and again, just hearing from different accountants, that's what they have expressed to me. But anyway, so we'll just go on and select add adjustment and finish. So QuickBooks tells us, hey, you've reconciled, and it has created that adjustment account. Okay. So that's how I would do that 1 cent. Thank you guys for feeding into my need there for validation. You're welcome, Ida. Alrighty. So any other questions on reconciliation? Just remember, you can highly recommend you do it at least on a regular monthly basis, and have it correspond to your bank statement. Also, you can do this on your any of your checking, your savings accounts, your credit card accounts. You can do it, and you can also reconcile any of your asset, liability, and equity accounts as well too. Okay.
Sandra, I was going to ask you, do you have any tips for organizing the paperwork so that your reconciliation goes faster, or if you have a mistake, it's easier to correct?
Chris, I'm sorry, it might be on my end, but you're really low.
Oh, I'm sorry. How about
Oh,
now?
there you go.
I think the connection's loose. I'm sorry. Do you have any tips for organizing the paperwork so the reconciliation goes more smoothly? Or if you have a mistake, you could easily find the answer?
Yeah. So definitely, having that bank statement, I would, I know I am an advocate of, not killing a lot of trees, but sometimes it's better just to go on and print out that statement and have it in front of you instead of having it, electronically. So I would definitely recommend that. That will cut down on things. The other thing that I would recommend is, for your, for some of you, you may have checks that you write. You may have stubs, check stubs, or I know some businesses actually make copies of their checks before they mail them out to their vendors. So whatever backup that you have there, I would have those checks readily available. The other tip that I would do, especially if you don't like reconciliation, however, QuickBooks has definitely made it easier. I will say that. I tell people that, set a time, actually schedule it into your day, where from 3 to 4:30 you're going to reconcile. And I say this jokingly, but it might be, you might want to do this. Let your folks know that you're reconciling and you're not to be disturbed unless somebody's bleeding. No. That's the only thing about having it online, and I can't see your faces. But thank Miss Lucero for laughing with me. Another thing that I like to do, Chris, too, is I like to be in a really good mood, and so I like to listen to music whatever music that is for you, or whatever puts you in a calming, peaceful mood. I would recommend that before reconciling too as well. So those would be my tips.
Perfect. Thank you, Sandra.
You're
And then Crystal, I guess we scared her. She says, not sure if I missed it, but can the reconciliation be undone?
Yes. So with QuickBooks Online as well as even QuickBooks Desktop, you can undo a reconciliation that you've previously have done. And uh, so here, let's see. I guess it's not there. Let's see. Where is it? I'll have to figure out where it is. Where you can actually go into the last reconciliation and tell QuickBooks to undo it. And it will undo it. And if you have another reconciliation from that previous month that you need to undo, QuickBooks will allow you to undo it as well too. So yes, it can be done. The only thing is, in answering your question, Crystal, you can't. So let's say, so we did January just now, and let's say that there is a mistake in October of 2021. I just can't go and undo October 2021. I have to do January, then December, then November, and then October, and then reconcile each of those to bring us current. But it can be done. Okay. Alrighty. So let's transition and let's take another 5-minute break. And if you'll stop recording, Christopher. And do you all have any questions, any additional questions on reconciliation? All right. Lori raised her hand, Chris. Do you want to activate her? See what
Sure.
question she has?
Yes. Laurie, you're allowed to talk. You're on mute. Unmute and you could speak.
Sorry, I just had a quick question. So you said if like you didn't reconcile something correctly, like in October, you have to go all the way back and reconcile starting from like January, then December, like backwards, or can you start from October and go forward?
Yes, you have to. If the last reconciliation was January of 2022, you would have to unreconcile that, and then December unreconcile, November, and then October, and then redo all of those months all over again.
Okay, thank you.
Uh-huh. So sometimes you don't have to unreconcile if especially if the balances, you did balance with the bank. And I'm trying to think of it depends, Lori, on what the mistake was. So let's say that there was let's see. Let's say that there was a check that was written and the expense was to an insurance expense account, but it should have been a utility expense. You don't have to undo the reconciliation. You can just make the change because it's just affecting the account that it's going into. It's not going to change the date or the amount. That's not going to change.
Okay.
Now, okay, does that make sense? Are those the kind of mistakes you're talking about?
Yeah,
Okay.
Okay.
Cool. I'm so glad that I thought about that. Um, let's see. Yeah, I'm trying to think of other mistakes that would require you to go back and unreconcile, but that would just be if your ending balance didn't balance. But again, you can do that adjustment, and your accountant at the end of the year, uh, you know, if we could figure out what that mistake was, you know, why you were off by the penny or the $4, then a journal entry could be made to take it out of that adjustment account and put it into an expense account. But rarely, really, should you have to do unreconcile. Okay, great question. Okay, so let's talk about our sales tax. And again, it's gross receipts tax here in New Mexico. So we use the GRT instead of just saying sales tax. So QuickBooks, and let me go back to it. I think I have something else in here. There we go. So most of you will be at your dashboard on your navigation bar, and then just taxes. So this tax option, any time you're paying taxes, whether it's your GRT or your employee taxes, you're going to come to this tax section on your navigation bar. Okay? So we'll go on and click sales tax, and I'm going to have to flip back and forth probably with my PowerPoint, but here are just the kind of the beginning steps to actually set up your sales tax center. Again, you're going to need your for the gross receipts tax, you're going to need your New Mexico business ID number, and then the different tax rates that you will charge your customers. So we'll go on and click on Get Started. And this is going to be important for identifying which sales tax, gross receipts tax rate that you'll have to use. And your business address, it should already be set up, but for some reason, if you're physical, and we're going by your physical business address, not your mailing address, because that could possibly be different. So it's your physical address. Then you would need to change it here if it needs to be changed. If it's correct, then that's cool. So we'll go next. And then here we have already have some taxing authorities, agencies that have already been set up. Again, this is a California sample company, so that's why we have California. But if we were definitely in a different, for New Mexico, of course, we would have, New Mexico, the state of New Mexico, and then we would then have the different tax rates. So, like, I'm here in Clovis, so my business is within the city limits of Clovis. I'm going to use the City of Clovis tax rate. And let's say that I had a customers who were, actually, they don't do that anymore. We do have a construction company here. Okay. So for construction companies, if you do construction work in Portales, but you're here in Clovis, then for that particular job, you would have to use the Portales gross receipts tax rate. So you would have Clovis, and then you would have Portales. Okay. Pretty much for retail businesses, the sale is really going to be probably at your place of business. So it's your location. So you're going to use, again, whatever your business location is. Okay. And then for New Mexico, the official gross receipts tax agency is the New Mexico Taxation and Revenue Department. And so here, and I'm just going to pick something. Let's see, this was Arizona. Let's see if I can type it in here. See what comes up. So Arizona Department of Revenue. I don't know if that's the right one, but I'm just typing it in. Actually, let me see if New Mexico is in here. New Mexico. Yeah, New Mexico Taxation and Rev. And then for this top part, this is for employment taxes, like when you do state withholding, then you'll have to, that goes to taxation and rev too. So we can type in New Mexico and select New Mexico taxation and rev. Okay. Then we'll click next. And then we have the opportunity, if we needed to change any of the rates, we can do that. And we're going to say that they're all good. So we're going to do save. So now we've set that up. And create is just showing us, and I don't know how you all can really see that, so I may have to just, I'll go back in it or go in it and do it so you can see. Okay, so the Arizona Department of Revenue, again, I have some more information that I need to include for the sales tax. Again, gross receipts tax. So New Mexico allows you to pay either monthly, quarterly, or semi-annually, right? And it's pretty much somewhat like Arizona has here. I'm not sure what the actual dollar amount is, and I don't know if Christopher knows or not, but it seems like if you make over, I want to say over $400 a month in sales tax or gross receipts tax, then you have to choose the monthly frequency. But anyway, you have those options here in New Mexico. It's just monthly, quarterly, and semi-annually. We don't have any, and seasonal. Seasonal is another option.
Sandra, my client told me yesterday that it's $1,000 or more now.
Oh, okay. So is that the gross receipts tax is 1,000 or the gross receipts?
The gross receipts.
Oh, okay. Okay. Thank you. Alrighty. And this is for New Mexico. So we'll do monthly. So for each agency, we have to select how often we're going to pay. So again, information that you need to have with you before you get started. Okay. And so those are the different taxing agencies. And so based on how we set it up, and if we do have any sales tax that are due for a particular time period, then it will show up here. So we're still in the month of February, so there's really nothing due right now. There's no taxable sales or anything, so there's nothing that we need to pay for this time period. And the same thing for all of our other taxes. So this, to me, this is pretty neat. It is a picture view of where you are, you know, in this particular month. And so I think I think it's really cool. Okay. Let's see. So down here we do have for the month of January, we do have some gross receipts taxes that are due. So let's click on this view tax return. I'm not sure exactly what we're going to get since we put in New Mexico, and it's actually, you know, another one, another state. So let's see. So based on our sales for January, which are a little bit over $4,000, and QuickBooks is pulling all this information from your invoice that you created and your sales receipts that you created. So any of those two documents, that's where it's pulling the information from. So you have $30 of non-taxable sales, and then that gives you $4,056.75 of taxable sales instead of the entire $4,086. Okay. Let's go on and select View Tax Liability Report as well too. Let's see what that looks like for us. And it's really good, you know, when you are, before you pay taxes, that you do look at these various different reports, and that you have a sense of knowing that that the reports are correct. Okay, and if they aren't, then you can make an adjustment with it. And I'm not sure why this is taking so long. Let's see. I don't think it's my computer. You know what? Let's see. Yeah, I don't know why that kept going. So this is what the report will look like. Now, on last week, we had the discussion about the different accounting methods, like the cash and the accrual method. And remember, I told you that accrual is where you are reporting the product and services in your books, whether or not you receive the money. So it's being recorded and accounted for, and you have not received the money necessarily. That's the accrual basis. And then the cash basis is where you have received the money for your products or services that you've offered. That's the cash basis. So when you are dealing with taxes, this is where that accounting method will have an impact on you. And I'll see if this report will do this for me. So right now we're on the accrual method, and we see that the taxes that we owe is $324.54 on this taxable amount of $4,056.75. That's the accrual. Now when I change this to the cash and I run the report, so again for the same time period, my total gross receipts reduces to $2,984. So for the month of January, for all of the customers that I billed that have paid me, is only $2,984. And the tax due is $231.52. Now, let me ask you all, would you rather pay, which one would you rather pay the taxes? On the cash method or the accrual method? And you can just put your answers in chat. Okay. Give you a little bit more time. Okay. So, what I would recommend is that you actually pay it on the cash method, because you don't want to pay the state of New Mexico on monies that you have not received. For those, even though you're going to believe that all of your customers are going to pay you on time or pay you sometime in the future, the state of New Mexico basically gives you that option. But I would say, just really, when it comes to cash flow management for your business, it will be better to pay on monies that you've already received in your hand and not those you're expecting to get in the future. Okay? So paying taxes is better on the cash method. Okay? Because again, the cash method says this is money you already received. It's only $231.52. The accrual, and let me switch it back to accrual, says that you have some of this 4,086 you have received, but over half you have not. And you would be paying the state of New Mexico extra $120 something on monies that you have not received. Okay? Yeah. So definitely cash. Okay. Alrighty. So the other thing that I'll just point out too, where these sales tax liability reports will come in handy, is when you go and you actually enter into your taxation and revenue account, which is on the taxpayer access point, right? You have your own username and your password that you enter, and you actually have to fill out the a tax form. And on the tax form, I believe in the very first column, or I think it's the third column now, it asks, what is your gross receipts? And so that's where you would put the $2,984. And then the next column says, do you have any deductions? And so just that word deductions can be confusing to people. And just remember, when it comes to gross receipts tax, the deductions that it's talking about are those gross receipts that are not subject to taxes, which on our sales tax liability report, it would be this column, non-taxable. So again, on our taxpayer access portal, in the deduction column, we would enter the $90. And then I believe it will just compute the taxable amount automatically. And so it will change it to $2,894 is what your gross taxable amount would be. Alrighty, let's see. Thank you, Peter. I don't know if you've already left. And the Q&A. Let's see. So, Mason, you said I was under the impression from my accountant that you generally choose one method and stick with it for the life of the business, cash or accrual. Yes, Mason, that is true. But the accounting method, depending on what you are talking about, can be different. So let me give you an example. So again, when it comes to the tax portion of it, the gross receipts tax, I always say to do cash. I would never do accrual. I just would not do it. But that's your decision, and that would probably be a question that you need to ask your accountant too as well. Why would you want to use the accrual method and pay taxes on money that you don't have yet? And that's how I would ask that question. Then, Mason, I don't know if you are you a product-based business? Oh, you say you just use cash for anything. Okay, your service. Okay. So, yes, you would use cash for everything. Now, for those of you who have products that you are selling, to your customers, so basically you have inventory. When it comes to reporting or completing your federal tax forms for your business and you have inventory, then the Internal Revenue Service says that you have to use the accrual method of accounting. Okay, so you can't use the cash method. But see, this is only on your federal tax return. So your federal tax return does not dictate your New Mexico gross receipts tax form. And hopefully that kind of makes sense. Alrighty. Thanks, Mason. Alrighty. So any other questions on sales tax? And of course, in New Mexico, again, if a construction business, if you had taxes for here in Clovis for jobs that you did, and then if you did jobs in Portales or outside the county or another city in New Mexico, that'd be a different tax rate. Okay. And then again, I know we talked about this last time. The Taxation and Revenue Department, they do have a YouTube channel where they talk about the different tax obligations, especially for those of you, and I don't know how many we have on the line, but if you have customers that are outside of New Mexico, those sales that you make to those customers may possibly be a deduction. And but there is a whole, I think it's about an hour YouTube video talking about those issues, and it's outside of New Mexico, and actually in chat. It is the different deduction or the deduction for out of state buyers. It's 7.9.13.1. And so anyway, if you wanted to get more information on that, I would definitely recommend you go and look at that video. And they have several different videos on their YouTube channel. So Crystal asks, what section in the website is where you put the non-tax amounts, non-tax gross receipts? that'll be in that deduction column, Crystal. So again, pretty much like it is here. You still have to report all of your gross receipts, income. And I will tell you, if you don't, and especially if you get a 1099, oh no, let's not even talk about 1099. If you report here a gross receipts amount and you report to the Internal Revenue Service a totally different number, for the whole year, I'm talking about for the whole year, then when you're audited, that is definitely going to be an audit finding, and the state of New Mexico is going to send you a letter and says that, hey, you have income that you reported to the federal government that does not match your gross receipts tax reports. And so they're going to want you to explain it, and send them some money if you can't explain why there's a difference. So that's why all income that you receive, you want to enter it in that. I think it's the third box, I believe, but it's where it says gross receipts. So gross receipts is the same thing as total sales, total income that you receive for your business. And then for the non-taxable amounts, whether it's another business that gives you an NTTC, so a non-tax transaction certificate, or if it's sales that you made to out-of-state customers, it will go in that deduction column, which for QuickBooks is the non-taxable column. But for the state of New Mexico, it's called the deduction. And you have to tell New Mexico why you are deducting this amount. So you have to give them a code. And again, that code that I put in chat, that's a good reference for that. Let's see, we have some more Q&A, I think. Let's see, Brianna, sales tax. Okay, yes. So we will do that here shortly. Miss Lucero. Let's see, there's something in chat. So this is saying in this box that this is non-taxable for New Mexico. Not completely non-taxable. Mason, I'm not sure if I understand your question. Because right now all we're talking about is state gross receipts tax. So this is where you're just not going to pay tax. Oh, about the federal government. Okay, gotcha. Alrighty. So what I'm saying about the federal government is right here where I am circling this $2,984. This amount is what you want to report to the state as well as to the federal government on the total income that you receive, the total sales that you receive. So these numbers need to match the federal and the state. That's what I'm saying. And then, but the state says, well, as far as it relates to New Mexico taxes that we're going to charge you, you can remove those charges that they're non-taxable as far as gross receipts tax is concerned, and their sales that were made to people outside of New Mexico. So we're not going to tax those customers that don't live here in New Mexico. And that's where the $90 comes into play. I'm not sure if that helps. Okay, cool. And then Chris did put exactly the link for nonprofit organizations, and Taxation and Rev also has their forget the name of that.
Sandra,
But
that link's actually for the FYI 105, which is
cool.
the full everything you need to know about GRT.
Cool. And that's what I was getting ready to say. Great. I was hoping it would, but I just saw the non-tax. Yes. So that will have everything that you need in electronic format, in addition to looking at those videos. Alrighty. So let's see if I can do this really quickly. So let's go back to the taxes. And let's see. So this was, and I apologize who asked me this question. I think I've already cleared it out of Q&A. But where you would actually pay for the taxes, and oh, let's see. Let's just let me view tax return. So on this screen, you would still go to taxes on the navigation bar, select sales tax, and here, and I'm not sure why it's not showing, it should say to pay taxes. And so after you have determined that the report that was created in QuickBooks is correct, oh, that's why it's not showing. Because this tax for January isn't due until the 25th of this month, or in this case, the 20th of this month. So the action is, all you can do is just view the tax return. So come February 20th, then right here, you'll have another action that will say pay the tax. And so what that will basically do for you, I want to say Crystal asked that question, I can't remember. Then you would click that button. Again, you'll look over it and make sure that you agree with the amount, and the amount should be the same that was on the actual return. You're going to select how you're going to pay for it. So you're either going to the state of New Mexico allows you to pay it using a credit card or doing an ACH. So all you're doing in QuickBooks at that point is recording how you plan to pay for it. And so if you plan to use a credit card, then you're just going to tell QuickBooks, I'm going to use a credit card, which credit card you're going to use, create the transaction, and then it's recorded in your credit card register. Now, that's one of two steps. The second step, of course, would be to log in to your taxpayer access portal, and you have to create the return for New Mexico, which we just went over that, submit that, and then make the payment. And then if you made it by credit card, and put your credit card number in, they're going to charge you a fee. So I recommend that you guys just do an ACH, and then the state of New Mexico will not charge you for ACH, but they will charge you for a credit card fee. Okay? So again, I apologize that I can't remember who exactly asked me that question. Oh, Brianna, Miss Lucera. Okay. All right. Any other questions or? Okay. So on mine, Lori says, I see the same amount of the city, state, and county level. Does that mean all my reporting is okay? So if you see the same taxable amount, then your tax rates are probably not different. So, because the city has one tax rate, and I'm thinking whatever city you're in. I'm not sure what city. What city is your business in? That should be the city tax rate. Okay. And then you have one just for the state of New Mexico, a separate one. I guess so. Yes. Okay. Okay. You're gonna make her active so we can have a dialogue, Lori.
Lori, you're
Yeah.
okay. There you are.
Okay. Yeah, no, I'm just kind of referring back and forth between how I have things set up in my personal business. And so on that, what is it? The report, it does say state, county, and city, and all the gross sales are the same. They're not added up. Everything is the same. So the non-taxable sales, taxable sales. And I was just wondering about that. Like
Okay.
if that's normal. Yeah.
So is the tax due 3 times the amount, or is it?
They're all different. The tax
Oh,
amount
okay.
is different. So like the state is more than the county is more than the city. But
Okay.
the city's higher.
So um, somewhere probably in your setup with your customers,
Okay.
you're just charging your customers the the state tax or the county tax. But and what type of business do you have? Is it a service, a retail?
I do service consulting.
Okay, okay. So you should only have one tax rate,
Okay.
and
Okay.
that should be for Albuquerque.
Okay.
If you're within the city limits of
Right. I am.
Albuquerque. Yeah.
Okay.
So those other tax rates, so let's see. Um, let me see here. Let me go to reports. I just want you to. I just want to make sure that you only have one tax rate set up. And
Okay.
it sounds like you have 3, in which you
Okay.
really don't need to.
Okay.
So we'll need to go in and probably delete those other ones because all you need is Albuquerque.
Okay. Because I actually am getting reports back saying I should get a refund. And I'm like, I don't know what happened. And I'm guessing what you're saying is correct. But I won't take up time here. I actually have an appointment with some folks to help me. But
Okay.
it's just helpful to like understand the questions.
hmm
So I appreciate it.
Okay. You're welcome. You're welcome. All righty. So we're like 3 minutes into our lunch break. Uh, cool. So we finished sales tax, and we didn't have any questions, and I didn't see any that I needed to address um, after coming back. And so now we'll just kind of take care of some reporting uh, different reports that you can pull for your business, and we can address any other questions that may have come up, or if I don't remember seeing any emails from anyone over the last week on a particular topic or question that they had. So if you do have one, go on and put it in the Q&A, and we will do our best to answer that question. And of course, if it's something I need to go and research, then I'll let you know, and then we can send you out an email in response to that question. So I will share my screen. And hopefully you all are, let's see, let me get out of that. You should see the dashboard for Craig's Design and Landscaping Service. Does everyone see that? You can either give me a thumbs up or chat. Yes, thank you very much, Miss Lucero. Appreciate it. Okay. So reports are your friend. Reports are going to help you in your business. Number one, know where you are in your business. Number two, they're used as a guide to reflect where your business, how it's trending, whether good or bad. And the other thing that your reports will do for you is help you make those management decisions. And also, if you are looking at getting a loan or maybe bringing in investors, your financial reports are that statement that the lender and those investors are going to want to see. And the neat thing about those reports, you can have the availability of going back in history, as well as doing budgets to really kind of project your future as well. So Michael, yeah, I will talk about that now. Michael is asking, can you explain how splits work? So basically, Michael, what a split is when you have one transaction that affects more than two accounts. So let's say that you have, let me see. Oh yeah, a good example of this is, let's say that you go and you purchase office supplies. And at the office store, you also purchase a computer, or maybe, or any other type of equipment. But let's say you purchase an actual computer, and you purchase paper and pens and, just some other supplies, or even cleaning supplies. So, but it's all on one receipt. So I will actually, let me give you a verbal or a visual of what that would look like. So we will have, let's see if we have an office supply vendor in here. Let's just use this Computers by Jenny. And we're going to actually do a credit card. So the split will come down here in this section. So a portion of what we are purchasing from Jenny, as I said, is going to be equipment. And that category, because we want to say that this equipment that we're purchasing is actually a asset for our business. And let's see if I have to make one up. Probably do. So let's say it's a computer. It's not computer repair. We want to say computer equipment. The only thing I hate when it actually jumps and it thinks it knows what I'm wanting to do. Okay, so that's an actual asset, it's a fixed asset, and it's a fixed asset computers. Now you're not going to have to do this every time, it's just that I don't have this account already set up. Do save and close. Okay, And we actually purchased a Mac Pro Air computer. And the amount, because they're pretty pricey, we're going to say it's $15,000. And then also in that same transaction, we purchased some office supplies. So we're going to say office expense, and this is paper. I say it's toner, and pens. Now we could enter all of these separately, but we're just going to lump them all together. And we're going to say that that came up to $50. Okay. And then our office supply store. Let's see, I don't know if I have let's see if I have a category for this. I don't want to, just supplies. And those supplies would be cleaning supplies. And that came up to $25. Okay, so now, again, because this one transaction covers several different accounts or categories, and I want to be able to distinguish what those are. This is the split, where we're just splitting that transaction into more than one category. Okay, does that make sense? Sorta, kind of, Michael? Okay, I'll wait for you to respond. Okay. Alrighty, cool. And any of your transactions, we're going to save and close that. Any of your transactions can have a split. So this could be like when we made the deposit earlier this morning, it was split between accounts receivable, because that's money we received from our clients, and then we actually recorded that $10,000 check that the owner had invested into the business. So that's a split as well. And so when we come back to the expense transactions, then yes, anytime you see that split, then that means it's more than one account. Whereas these, this credit card, it was only for automobile or meals and entertainment. Okay, great question. Okay, so on the navigation bar, I'm going to click on reports. And QuickBooks has 3 different tabs for the report center. You have the standard, which is all of those reports that automatically QuickBooks will provide to you based on the type of business you have, and then also based on the subscription level that you have. And then the middle tab where it says custom reports, these are reports that you have actually saved. You've made some changes to it and you told QuickBooks, okay, I want you to save this for next time. So that would be your custom reports. And then your management reports. These are, again, reports that QuickBooks will generate for you that are based on what, just to see, again, all of your snapshot of your company. So kind of give you an overview. Or if you're really looking at sales, how am I performing as it relates to sales and then expenses. So let's look at the sales performance. And this one, we can, on all of our reports, we can tell QuickBooks what time period we want it to prepare that report for. So we'll click on View. And so QuickBooks does something just a little bit fancy where it will give you a nice little cover for your report, and really great if you are, again, if you have investors or other partners, or again, maybe even your lender, where they're, maybe wanting a quarterly or annual report from you, and you can provide one of these reports to them. So remember earlier I added our logo. So our logo would be on this report. So it's at the, actually, let me make this a little bit bigger. There you go. So you can, now, did you all see it? Did it jump where you can really kind of see the page a little bit more? Has management report. If not, then I may have to go. Thank you. Alrighty. Okay, so that's page 1. So I'm just scrolling down. It tells what date, and then for management use only. And it's just going to give me those reports that will be good for management to make whatever business decision on. So your profit and loss, and accounts receivable aging report, and a sales by customer summary report. So let's look and see what those look like. So your profit and loss, it's just like any other profit and loss, and I'm not going to go too much in detail on this because I'm going to bring up another profit and loss report. But you have your income, then your cost of goods sold, and then your expenses. And then at the end, your net income for this entire year. And then the next is your accounts receivable aging detail report, which again, this would be good for management owners, to look at and see what customer owes us money and how far past due it is. And all of these are 91 or more days past due. So that can be very significant to know that these customers aren't taking care of their obligation to you. And so you, as running your business, then you have some choices. You have some decisions to make. Whether or not to continue doing business with this customer, or if this is a one-off type invoice, that they just didn't pay for whatever reason. But again, a good report for you to make decisions on. And this is basically money that could be in your account that you can use to purchase that equipment, that computer that we were looking at earlier, or whatever else, pay other bills. And so that's the first part of this. Let's see. And then you have your sales by customer summary. So again, this is a really great report as well too. You can see which is your customers that spend the most money with you, or I should say that has the highest sales. And so in this case, it's Cool Cars as compared to all of the other customers. And so you may want to maybe offer Cool Cars some incentives, or see what they're buying. See if you can maybe offer a bulk purchase for them. So this report can tell you a lot of different things. So we have some Q&A. Let's see. Got that? Okay, so Lauren, so you have an individual who hasn't paid you, and they probably won't, and so you want to get them off of your list. So this is, again, man, such a great example of why when you pay your gross receipts tax, that you pay it on the cash basis. because paying on the cash basis, whatever, Lauren, whatever you sold to this customer, if you pay your gross receipts tax on the cash basis, then you didn't pay taxes, gross receipts tax on this particular customer because you use the cash basis. Now, if you use a accrual basis to pay your gross receipts tax, then this is taxes that you paid on monies that you're never going to receive. So again, another reason why to use the cash basis. So to get them off the list, so what you would do is actually go into their account where that invoice is, and then just void out the invoice. So let's see, I'm going to swing back and I'm going to just show you this really quick. And again, I just need you all to let me know if you see the sales screen where the invoices are. Just want to make sure that you do see that. Okay, I think I have a yes. Okay, so let's say that we want to, let's see if we can find, it really doesn't matter. Let's just go with this one, Cookies by Kathy, where it's over 45 days. We know that she is not going to pay us because she filed bankruptcy or what have you. So we can just come to her account, and all I did is click on this arrow going down and then select void. So QuickBooks says, are you sure you want to void this transaction? And we'll say yes. So now let me go over to, what was it? Cookies just by Kathy. I'm going to bring her account up. So now I go to her account. Here's that invoice, and I voided it out. And so it's off of our list, and or it just shows that she doesn't owe us any additional money. And then the other thing that I would do is probably add a note here to say, let's see, based on documentation received, this person or business filed bankruptcy, if I can spell it. And we'll say December 2021. So just whatever, can't spell. Whatever note will help you to know what happened to this customer, and you want to put it here so anytime that you come to this customer, you'll see this note here. And actually, you know, the other thing that I would probably add, I probably should have added the actual amount that they owed. What was it? I think it was $75. Let's see. Customer balance, $75. So then that way, before I do business, you know, if the name ever comes up again, or, you know, I know, you know, who this particular customer is of this company, then I may want to think twice before doing business with them, and I should say not or, and definitely collect this $75 from them. Okay. And Lauren, I don't know if then I answered your question. you said, is it that simple? I won't need a record of that later. You can, before you void it out, you can print that invoice and then just upload it to their file or just keep it in their records. And so that you can see that invoice, or like I said, definitely in your notes, in addition to customer balance, you can, enter what you actually paid or what you actually sold them that they didn't pay for. And yes, QuickBooks will always keep this invoice in the client records. It will not be deleted or, removed. It's going to stay there. The other thing that you could do is here on the message on the statement, see how it said voided, and you can also add a business file for bankruptcy. So whatever notes are going to help you determine what this is and how you want to go back to it. So, so what happens in your books, then what QuickBooks will do is it will reduce your sales for that, from that $75, and it will also reduce your accounts receivables by $75. Okay, let's see. So that was answering your question, Michael. Where does it end up in the books? Alrighty, great questions. And let me check chat if there's a thanks, Mason. Kathy owes us some cookies. Alrighty. So back on the reports. So you see how the management reports work. So you can go in there and play with it. So back on the standard screen, we have our favorites. So these would be any reports that we are going to print on a regular basis, or we need to view on a regular basis. And really for any business, especially for those of you who are using the invoice way of billing your clients, I would definitely have accounts receivable aging summary. Again, that's a quick view of who or how much money is owed you, how long it is, and then you can also click on, well, let me just click on it so you can see it. So it shows us who's current, and these are probably invoices that we have done, probably in the last, definitely in the last 30 days. And then we have invoices in the next column, those that are due or past due, I should say, in 1 to 30 days. So let's say that you gave them 10 days from the date of the invoice to pay, and Amy didn't pay, so she falls into the 1 to 30 days past due. Then you have your 31 to 60 days past due, then your 61 to 90 days, and then 91 and over days. So again, you can scroll down and really kind of see where your money is. Do you really want to go on and try to collect from this Red Rock Diner, this $156? And either, hopefully you've already started calling before this point and sent some statements. And so now, if they haven't paid, then again, you as a manager, the owner, you need to make decisions. What is going to be the next step? Hey, so that's just one report. And let me go back. And then, of course, our balance sheet, and I'll come back to this one. And then we have our profit and loss, and I'll come back to this one. Okay, so the next section is our business overview. So your business overview are really those financial documents that we call, your balance sheet and your profit and loss and your cash flow statement. So that's what's here under business overview. And you guys can take time and play with that and see what those reports look like. And then who owes you money? So this is really dealing with your customers. And again, a lot of those accounts receivables, I've already talked about it. There's a collections report. There's an invoice list. So we're trying to just get a list of all of our invoices. We can do that. Invoices and receive payments. So if you think that a client has paid you and for some reason you can't find it or there's something, there's a report that you can pull to really give you more background information. And so all of these can be expanded or they can be closed up too as well. Then we have our sales and our customers. So this is going to relate really in particular to income amounts or types of income, type of sales, type of products that I'm actually selling to my clients. And this is also where we would find any transactions that we have put a tag to. And we talked about the tagged option last week. So we'll close that up. Collapse. I can remember what it was called. Collapse or expand. And then what you owe. And this would be the vendors. Just summaries of what you have paid out or will pay out to vendors. So unpaid bills. Vendor balance detail, and this is really again when you're using really those the bill pay option to enter your bills. And then you have your expenses and vendors again as it relates to particular expenses. And so let me let you see this. So here we have expenses by vendor summary. So all those vendors, again, this report could be very valuable to you as management, seeing what vendors that you're paying the most money to. And here's something that's interesting. There's a non-specific. So it'd be interesting to see what vendor that actually relates to. Oh, here's my reconciliation discrepancy. I knew there's a reason why I kept this company open so that we can really kind of see that. So I'm going to click on that reconciliation discrepancy. Remember that from earlier this morning? That $4.34. So this is where QuickBooks went in and made an adjustment and created this reconciliation discrepancy account. Then looks like we have an issue with the credit card issue. I don't remember doing anything to this one, so it's just that this one is not tied to a specific vendor. So we paid $34 on our MasterCard, but we don't know who the vendor is. So hopefully you still have the receipt, or from your credit card statement, you can go and find out who that vendor was and then record it, and it'll take it off of this transaction report. Okay. So that's just an example of the vendor summary. So again, you can go in and you can kind of play around and look and see what these different reports will do. And then sales tax, we did that earlier as well too. And then employees. So for those of you who actually have the payroll subscription, there will be a lot more reports that will be available. So let's go, I'm going to go back up and I'm going to click on the profit and loss. And the profit and loss is that income statement. And the income statement definitely on a monthly basis and then definitely yearly, you will create a profit and loss statement. So what I'm going to do is actually change this. I'm going to go up to the report period and I am going to say give me the profit and loss for last year. And anytime I change any of the options here in the report, I always have to click run report so that QuickBooks will go in and give me what I wanted, and the report will change here. So notice it's January through December 2021. The other thing that I can do is I can change the columns. Right now I'm just looking at the lump total. You know, let's say if you wanted to break down by month of your profit and loss. And actually I'm going to do it by quarter. And hopefully it'll appear on the all on the screen so you can see it. So now it breaks down that same report January through December, but by quarters. So everything that I made in January, March, and spent first quarter, second quarter, third quarter, and then the fourth quarter. And then it gives me the total. So again, if you're wanting to see what is the percentage of how you have grown from one quarter to the next, this would be a great report to pull. Let me take it back to total only, so I won't have so many columns. So let's say that I want to compare this report to another report, either in the previous year or a year to date, comparing it to year to date. So let's do that option. And then let's say that I want it to tell me what percentage of my expenses are related to income. And so I can do this, or I can do related to an expense too. So, oops, I got to do run report. So now QuickBooks gives us what we have from January through December, and then relating it to January through December, and then the percentage of income that is for our design income, and then our landscaping income. And then on our expenses as it relates to our total income. So again, you could just play around with these. I'm going to take those off. And just go back to just a straight profit and loss. So again, to go back to that, oh, I got a Q&A. Let me go on. The credit card bill with the short balance. Okay, we'll check that out. I thought it was a bank account. Let's see. I wanted to talk about accrual and cash. And this is as it relates to your federal taxes. So your profit and loss is the document that you report to the Internal Revenue Service. And this is how this is where your tax obligation is computed. You know, how much you would have to pay in taxes. So here in this example, right now, the accounting method, we're on the accrual accounting method. And when we scroll down, we see that our net income is minus $79.32. So really in this example, since our net income is a negative, then for the federal government, we're not going to pay any taxes because it's a negative amount. It's not a positive. So we won't pay any taxes. Okay. Actually, I don't like this example. Here, let me change my years or my reporting period. Let's do this year to date. Let's see if I'm gonna get a different. Okay, there we go. I like that better. So my net income is $11,751. So that means I would have to pay federal taxes on $11,751. Okay, for the accrual basis. So now when I change this to the cash basis, and remember I have to click on Run Report, and this is the cash basis. And now I scroll down to look at my net income is $8,393.15. Now, which one would you rather pay taxes on? $11,000? Again, that all the income that's listed there, some of it you haven't received if you're on the accrual basis, or do it on the cash basis, which you're reporting only money that you've actually received from your customers, and expenses you actually paid. So that's the other thing. And that is paying taxes on $8,393. I would probably say you want to use the cash basis because you're going to be paying less taxes. Okay, so so when it comes to, again, deciding which accounting method to use, when you're paying taxes, I would do the cash method. When you're looking at making management decisions on, again, you know, do I need to bring in more equipment? Do I need to hire more employees? Again, those management decisions, you want to look at your reports on the accrual accounting method, because the accrual really gives you more of a truer picture of your financial situation for your business. Okay. Alrighty, I'm going to go back to the report list, and I'm just going to pull up the balance sheet because we really haven't talked about the balance sheet per se in depth like we've done the P&L. So your balance sheet, again, you can select the different reporting periods. You can compare to another period. You can break it down by what your balance sheet looks like by day. So for each day in February, by month, if you had, it would do January and February, quarters, years, customers, vendors, and product and services. So you have all those different options. Also with the accounting method, you can do accrual or cash. So you can see both. So we're going to look at the balance sheet, and this is on the accrual basis. Now, whether you do for either accrual or cash accounting method, let me just make sure. Your cash is pretty much always going to be the same. Accounts receivables pretty much will be the same, whether it's cash or accrual, because really accrual, yeah, it'd pretty much be the same. Your inventory assets would be probably pretty much the same too, as well as some of your other fixed assets. So these are all your total assets, and here's your total assets for your business, $35,000. Then for the liabilities, of course, this is money that you owe to other people, and so accounts payable will appear here only if you have used the interbill option to initially record all of those bills, like your phone bill, your utility bill, vendors that you may owe money to because you purchase products or services. If you went directly and just wrote a check or created an expense transaction and recorded it as paying with a credit card, it's not going to appear in this accounts payable. Okay? So, and again, that would be the difference, with cash versus accrual accounting method. MasterCard, so any of your credit cards that you've listed will appear, and then any taxes that you owe that you haven't paid yet, and then any loans. So all of that will appear, and the total would be your long-term liabilities. And then, as I said earlier, if you were to take all of your assets and convert them to cash and then pay off your liabilities, all your liabilities, what you will have left is what you as the owner has put into the business. So we have our equity, which is also referred to as net worth. We have our owner balance equity. I'm not sure why that's minus, so that's should be more of a positive number. So we'll have to look at that. So that would be a possible concern. Retained earnings, and basically what retained earnings is. Oh, you're just saying hi? Okay.
Oh, I wanted to let you know I'm back, Sandra.
Okay, cool. So retained earnings is just the collection over the years of what your net profit or net loss currently is. So it's a cumulative account, and it's saying since this business has been open, it has had the majority of net losses for this business. So you have not shown a profit, and that profit comes again from your profit and loss statement, your income statement, okay? And this again reflects over the years. And then the net income, this amount is what your net income is currently for this calendar year, if you're on a calendar year. And you do the math, and it comes out to your total equity is $2,334. Again, represents that you as the owner, total what you've put in and taken out is $2,334. And then of course your equity and your liability added together is your total liabilities and equity, and this number, this 35,000, will always equal total assets, and that's what gives it the balance sheet. Okay. Alrighty. So any questions on reports? Or did I answer almost all of them? Except Michael's. Okay. So do you all have any other questions that may have come up? Something that I could possibly show you?
And Sandra, do you want me to just open it up to where they could raise their hand and I'll unmute them?
Sure,
Would
that
that
would
be
be
okay?
great. Yeah. So we have our faithful 23 people that are still with us. Okay, that means I did a really good job then, huh? No. Or totally confuse all of you, or
Ida's actually raised her hand. Let me allow Ida
okay.
to talk.
I just wanted to go back and verify that we charge sales tax on the location because we do business in Santa Fe and we've done some in Las Lunas. We would have to use the tax rate for those areas for the sale in that location.
And Ida, are you a retail, a service, or construction business?
Service business.
Yeah. So, service business, you do it at the location, at your location. That's
So
the
I would
tax
have to,
rate.
okay, so I would have to put in the tax rates for Santa Fe County and Valencia County.
Um, okay, where is the service actually performed? In your home location?
It's a shredding business.
Okay.
So sometimes we just pick up the paper and then we bring it back to our location and shred it.
Okay.
Sometimes we shred it on site. So I have the Bernalillo County gross receipts tax on my credit card reader, and that's what it charges when they use a credit card or when we input the invoice. Sometimes it puts in based on location instead of New Mexico gross receipts tax of 8.875, I think is what it is. It'll do based on location. And then it's off a couple of cents from what I have as the standard rate.
So, from what I understand, it is now it is based on your location.
Correct.
So wherever your location is, and when I say your location, I'm talking about your business location.
Okay.
So if you're in Santa Fe, that's where your business location is. That's the tax rate that you charge.
Okay, we're in Albuquerque. So if we
Albuquerque, I'm sorry.
if we do business in Santa Fe, we still charge Albuquerque tax.
That is what my understanding is.
Okay.
Mm-hmm.
But QuickBooks, they said sometimes I'll open the invoice and it won't have the right gross receipts tax rate. It'll say based on location.
Okay.
And I can't figure out why it reverts to that sometimes. It could be the card reader we have. I don't know.
That possibly could be it. And you said your card reader is from what card reader is it? Square or?
Well, we use a company called Razor Sync for scheduling and invoicing, and then it interfaces with QuickBooks.
Okay.
I just wanted to be sure though that I charged the right tax rate for being in Albuquerque. We charged the Albuquerque or the Bernalillo rate,
Mm-hmm.
no matter where we service.
Yeah, you probably need to go to your card reader, and You should have the option of putting in the correct tax rate.
I did call them. They said that it does get the tax rate from QuickBooks. But like I said, sometimes it's off and we can't figure out why and they can't figure out why. So I just wanted to make sure I was using the correct tax rate based on where we are located.
Mm-hmm.
So that you answered that question for me. Thank you.
Okay.
Sandra, there's a question in the chat. Let me read it.
Okay.
Louisa asks, so to get a true picture of the business, you need to have your checking accounts, all bills, etc., entered and linked in, correct?
Yes, all of your business checking accounts, yes, should be in QuickBooks. I think that's what she's asking.
I do
And
too.
okay, and if that's not Louisa, we can bring you on so we can hear your voice. But yes, all of your business checking accounts should be in QuickBooks. If it's all a part of that one EIN number.
And oh, Louisa says yes, thank you.
Okay.
I chatted over. I just got a like an update from groceries taxation and revenue. They have two new apps, I guess, for calculating gross receipts tax. So I put that in the chat.
Okay, cool. So
And
awesome.
remember, everybody, raise your hand if you'd like to ask a question. I don't see any phone listeners. But if you are on your phone for some reason and it shows your name, it's *6 to unmute.
Okay, so we got all the answers. Okay. Well, okay, so um, we're basically finished. I always try to allow a little bit of extra time, in case we have some really in-depth questions, or I just kind of get bogged down in some of the topic areas, and so sometimes we don't always go until 4 o'clock or whenever we're supposed to end. So I do want to thank all of you for really spending this time. Not only is it your time, but it's also helping you to do those things that will help your business succeed. And so we're always excited here at the Small Business Development Center to help our businesses in the area. And as Christopher has said earlier last week, and I think I said it today too, that we are definitely here for you. And we have experts around the state that can provide answers or even directions to where you would need to go to find those answers. We're always here to even be that, what I like to say is the second opinion or the third opinion, or just to be that sounding board as well too. So we're here for you. So we appreciate you all, and so yes, Ida. So what we are doing is, depending on your area, and Christopher, you can correct me if I'm wrong. So you could reach out to your SBDC director in that area. Let them know that you did attend the class, and you would love to visit with myself and them, and we can help you with your questions. Is that correct, Christopher? Is that what we're doing now?
Yes. Do you want me to show them where the directory is online?
Yeah. Let me address these other questions real
Okay.
quick. Mason, oh, thank you very much. Uh, Thank you for having some very in-depth questions, making me think. I appreciate that. Lauren, let's see. A bank account for the PPP deposit only and use it for rent and utilities. Do I need to enter that account in QuickBooks to show those expenses since the money didn't come from the business? Yeah, so yes, Lauren, I would definitely link that account because it's still a business account. And um, the expenses are still deductible for you. The I believe it's the Internal Revenue Service came out with an announcement, and this is really because you all as business owners really push our Congress, and they said that yes, any expenses that were paid with any of the COVID money is a allowable expense. However, as we have said plenty of times, you definitely need to seek the advice of your accountant, your CPA on that as well, and they can direct you. And of course, you know, we can always send you the link where that announcement was made too as well. Alrighty. So I stopped sharing already. I thought I was still sharing. Lucinda. Oh, Lucinda. You know what? You know, that is a very kind of like uncommon name. I don't meet very many Lucindas. My oldest sister, her name is Lucinda. uh, so great to meet you. And thanks. Vaughn, thanks for being an advocate of the SBDC. We appreciate you too. Okay, great. You have answers. You just or questions, just let us know. We appreciate it. Thank you, Michael. Louisa, thank you. Chris, she's giving a shout out to you too. You probably already seen these.
Yes, thank you
And
all.
thank you, and you too, Christopher. We appreciate you guys. Brianna said, Crystal, thank you very much for the information. Alrighty. Ms. Williams, thank you so much, Sandra and Chris. The workshop was helpful. Now I gotta go back up to your message, Brianna, because you said mine too. Mine is too. Wait, okay. Thanks for the information. All right, Javier. Javier, I like that name too. All right, do we have some more Q&A?
There's one.
Lauren says, oh,
Oh, Lauren says, and then Ida says, also, when will this be on YouTube and how do we access it? Thank you. So I'll take that one. I'm going to put it on demand for a week, so I will email everybody who registered for this webinar when it's on demand, probably Tuesday of next week, maybe Monday, and then it will go on YouTube a week after that. And let me chat over to everybody our YouTube channel because Sandra's last webinar is on there already. Let's see.
do we
You'll
need
know.
to stop the recording too, or you want all this part of the recording?
We could